traders and investors with strategies and educational videos. If you are liking our videos, kindly subscribe, share, like, comment, and hit the bell notification so that you can be notified when videos are posted on real time. In this video, we will be discussing another simple but sure short strategy that might be useful in our trades. This strategy is said to yield high success rate on multi-time frames and you can be used for scalping, trading, or investing. This can be applied in futures, options and cash stocks as well. However, the chart should be trending for this strategy to work. There are two things when considering moving averages, simple and exponential. The major difference between an exponential moving average and a simple moving average is the sensitivity each one shows to changes in the data used in its calculation. More specifically, the EMA gives a higher weightage to recent prices, while the SMA assigns an equal weightage to all values. As in every strategy, there will be trades on both sides of the market. With this strategy you will never miss a trend, be it bullish or bearish. The way this strategy works is, whenever the candles are above the 10 EMA line, it signifies that the markets are poised for a bullish trend. After the first two candles in green, there are signs of reversal with a red candle and not touching the 10 EMA line. So this becomes our alert candle. We have to wait for the subsequent candles to break this alert candle's high so that we can take an entry on the bullish side. The stop loss would be below the alert candle or little below it according to your appetite. The exit should be at a point where the trend is reversing back to the 10 EMA. The risk to reward can be in the range of 1:2 to 1:5 and sometimes even greater if you know how to trail your stop loss. Here the EMA is sloping downwards, signifying that the overall trend is negative. The candles forming are red. So here we have to wait for the reversal with a green candle and the next candle red, breaking the low of the previous candle and trend downwards. Also, the important thing to note is that the candles should not touch the EMA line. Here after the 7th candle, a reversal red candle is formed, which is the signal, and then the next candle breaks the low, giving us an entry. The stop loss is placed at the high of the signal candle and the exit should be when there are signs of reversal. The risk to reward ratio could be 1:2 to 1:4 depending on our appetite. Hope the illustration is clear to understand. We have taken the Nifty Bank Index chart to spot a trade and we found it here. If you see, the trend was upwards and suddenly a red candle appears and the low is broken in the next green candle, giving the entry and exit the trade at sign of reversal through a red candle. The stop loss here was also very small. Normal stop losses should be 25 to 30 points in Nifty and 60 to 70 points for Nifty Bank. Also, if you know how to trail your stop loss, the risk to reward could be greater than 1:2, but if stop losses are hit, you should come out of your trade and wait for the next signal. Here we have taken the Nifty index chart to illustrate the bearish trading or scalping strategy. The chart is self-explanatory to look at possibilities of this strategy. Here are some mantras to be successful in the market. The market is always right and we have to ride the trend. 1. You should first test the strategy on paper before taking physical trades. Adequate backtesting should be done. 2. Should adhere to strict stop losses and exit trades on the first reversal along the EMA lines. 3. For buy side, the time frame should be at least 15 minutes and for sell, it can be 5 minutes. 4. Do not overtrade. Trade 3 to 4 times in a day to avoid losses. 5. Always decide your stop loss and take profit beforehand in order to be disciplined. 6. Always pick your stock or index which is trending. This strategy will not work in sideways markets. 7. If your stop losses are constantly being hit, close your system for the day and come back the next day. Before we end this video, we would like to put forth a disclaimer that it is not a recommendation from our side. This involves a lot of risk while trading and the loss or profits have to be borne purely by the user. We only bring these strategies for the benefit of our users and sole discretion is advised. Hope you liked this video. Please share, like, comment and subscribe to our channel for such kind of videos. Until then.